Let's get into the crypto Luna scandal. Now, everyone give me 45 seconds to break this down because it'll make a lot more sense about what's actually going on in layman's terms, and then we'll get the boys' takes on it. What is a stablecoin? It's a cryptocurrency designed to be pegged to another asset, like the US dollar or the euro. And as Tom Nash is doing his pegging sound.
I'm giving you a beat. That was my beatboxing attempt. It was very poor.
Thank you.
It was not so good.
Stable coins serve as a link back to the traditional finance system, acting as a currency with a value that many people understand, making it easier for investors to invest. Now, these coins rely on complex algorithms to keep their stability pegged to the US dollar. Terra USD is one of these algorithmic stablecoins, and it has a sister currency called Terra Luna, which through a seesaw attempt allows the Terra USD coin to be maintained at $1. However, Luna, the sister cryptocurrency, can fluctuate massively. Now, why did people even invest in Terra? They were offering a 20% interest rate to park your money in their Anchor protocol. What does that mean? In layman's terms, if you have a savings account, you know that 20% interest rate is insane. You're probably getting 0.0003% interest from your bank. So a lot of people put their money there. They're getting 20% interest rate. However, when Terra did announce that they were changing the interest rate fee from 20% to some other variable rate, everyone took their money out. They started selling. The USD level of Terra got away from $1. It deviated, which means Luna, which had around a $20 billion market cap, ultimately fell as Terra pegged away from the dollar. At one point, it was 63 cents, going down to just a few millions in market cap, which means a lot of people lost a lot of money because the algorithmic stablecoin was not algorithmically stable. Justin, is this the end for algorithmic stablecoins, and is this the new beginning of a crypto nuclear winter?
One, I just want to say my heart goes out to those folks that lost a lot. I saw a tweet over the weekend of this person that had staked his whole life savings of $2 million and lost it all because Terra went from UST. So Terra USD stablecoin went from $1 peg very, very quickly within a week to being today worth, what is this right now? It is 12, 13 cents. And Terra Luna, like the actual coin, went from 80 per token to it's basically zero. It's worth nothing. Everyone sold. And so, so sorry if that happened to you. Two, the broader reaching ramifications. One, are algorithmic stable coins dead? I think so, at least for the foreseeable future. I think when you explained it to, we did like a post-mortem for ROI Club members last week. There were signs, and if you just kind of hear it explained, it's kind of a house of cards, right? Yeah. Burning and minting based on a price of a very volatile floating rate thing. And then what happens if the algo doesn't, if there was kind of a bank run, right? So I think that's dead. That style is dead. And you see it also affecting like Tether and stuff like that right now, which I think those will survive. Those are supposedly backed up by US dollars in reserves. Are we headed into a crypto nuclear winter? I think this was the catalyst to kick. We had a positive catalyst that was kind of propping up the crypto world a little bit better than growth stocks. When they should, I've always said in the short term, they're not some sort of gold store value or inflation hedge. They have approximated risk assets. They're very risky assets. They're liquid venture capital, essentially. So it was stable versus growth stocks being pretty, we all know growth stocks down 80% plus or 60 to 80% plus. And so the war in Ukraine, right? And I think a lot of geopolitical stuff flowing into it propped it up. This, I think, was the catalyst to bring crypto down with every other growth asset. So I think, yes, this is the start of the next crypto winter. And I think I'm excited if you earn money, like if you still believe in Bitcoin and crypto in the long term, a crypto winter is the time to buy. Now, where does it bottom out? I think we probably go lower from here, but no one can really tell you.
Tom, your thoughts?
I think it sucks because the people who lost money on Luna and Terra Luna is the people who were on the conservative side of crypto investing. These are literally the people who said, hey, I don't want to risk it. I just want to be safe. And they put it in a stable coin.
Yeah.
And I saw some heartbreaking videos on YouTube over the weekend. It was really tough to watch. I mean, Justin is talking about one specific story. There's hundreds of these stories. I believe the wipeout was like a couple of tens of billions that was just wiped out. So yeah, it's really horrible. Now, what I think about specifically about I've never fully understood, and maybe it's just because I don't understand crypto as much as Justin, algorithmic stablecoins. Now I can understand the stablecoin that has actual assets to back up the coins. Again, assuming you can prove and there is actual compliance with said underlying assets, which has its own issues because I'm not sure that there are the correct checks and balances in place to keep it working correctly. With algorithmic stablecoin, there's literally nothing holding this whole thing together. It's our friend Patrick Boyle, who runs one of the most underrated channels on YouTube for finance, defined this, I think, in the best way. And he said, well, you have one coin they made up being propped up by another coin they made up. Essentially, they're printing more of this made-up coin to prop up another made-up coin up to a certain level. I mean, that's all it is. I think that once, obviously, the arrogance of Do Kwon didn't help in the way he behaved and the way he interacted with the community, because he ignored a lot of warning signs that were voiced over the past few months. People have been saying, hey, this is a very dangerous setup. And he did try to set up this, the Luna Guard, I don't remember how it's called, and he did try to do something about it, but he was very arrogant in his response to it because he didn't believe this might happen. And there's a lot of conspiracy theories running around talking about how this might have been a coordinated attack. I don't know none about this thing, but for me, it's very simple. I believe that when you have this whole spectrum of cryptocurrencies, I never venture out of tier 1, tier 2, which means Bitcoin, Ethereum, Solana, Cardano, maybe a few more. That's it. So that's why I've never really researched Luna, because I never ventured out of tier 2. Everything below that is just there's too much of a chance of monkey business over there, because 90% of them are just, funky. I stay within the very, the established coins. That's what I would say.
I mean, I agree. Most of my crypto is in Bitcoin, and I stuck it in the backyard years ago. I think this is just another good example. There was a lot of people. Why wouldn't you just stake 20% yields, 50% yields, 80% yields? And I always said, well, there's that counterparty risk. Percent yield as it looks like today, but it's pricing in some sort of risk. Well, this is the risk. If something's too good to be true, like something propping up another thing, and then you're getting 20% yields for just staking it for the US dollar, it sounds too good to be true. It's probably too good to be true.
Well, yeah. I think this was, look, people say that this was, it has these characteristics of a Ponzi scheme, because new money pays for the staking fee and then you get more clients, et cetera, et cetera. I don't necessarily agree with this, because in that case, loss leading as a marketing strategy in proper business would not exist. Sometimes you create a loss leading strategy and you want to get people through the door, and you take a loss in certain transactions.
Yeah, but the loss leading is because you're losing money on a product. It's like there's a real thing there.
Well, yeah. So the bet there is that the yield would pay for. I guess the return you'd get on the yield that you're paying for new users is greater in the network you're creating, which it seemed too good.
Which would be the product, right?
Yeah. I mean, just think about.
The idea is, if you're creating an ecosystem and you're selling a bunch and you're running a toll booth business, because essentially that's what they are, a toll booth business. So traffic is your product. So you want to generate traffic and you want to get them on your platform. So you essentially are saying, hey, sign up for, come and shop at my shop, and whatever you buy, I'll give you like Beats by Dre.
Right.
So it's a very expensive loss leading strategy, but it's for sure going to get a lot of traffic. Now you have to make the calculation. If you're the store, hey, how much can we monetize per visitor? Or we will go out of business if we don't do this properly. So the idea is, was the 20% a good decision or not? I don't necessarily know at this point, but it seems like it might have been a little bit of a stretch given what happened.
Yeah, I mean, I think that crypto itself has this thing where they're trying to reinvent things, but I keep trying to pull it back to concepts that we already have. LTV over CAC, lifetime value over customer acquisition cost. How much does SoFi pay for an additional user to put their funds into basically a bank? Well, that same concept should apply for stablecoin.
And the one thing you learn in business school, the first thing you learn is you know the story about the client acquisition cost versus retention cost. So it takes you have a startup. I mean, you know this, Justin, obviously you know this. So it's 10 times cheaper to retain a client rather than acquire a new client. It's the same thing with spend over lifetime. If you have a client that's with you for a while, it's easier to get increased net dollar retention versus recruiting a new client and getting them to start spending. So that's the idea works in theory, but I think Do Kwon's execution was, as evidenced by what happened, problematic.